My goodness, guys, this stock got completely destroyed today after the company reported earnings, and the company's called, I'm sure you guys have heard of it, ChargePoint, and their ticker symbol is CHPT. And take a look, guys, the stock went down 11%, which honestly, I consider that a blessing, considering earlier in the day, it was down 30%. You heard that right. It was down to what? Under $5, $4.96 to be exact, and then it rallied massively from $4.96 all the way to $6.20. So in this video, we're going to break down the charts. We're going to go over the numbers, the earnings, my thoughts, all that good stuff. But before we do that, guys, don't forget to get up to 16 stocks for Moomoo, the sponsor of today's video, by going down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And guys, listen to this, fund it with at least $5,000 for a limited time. You also get a free share of either Tesla stock or Google stock. So what are you waiting for? Use that link down below or go to stocksurfest.com/Moomoo. Get your money, guys. Get your stocks. And with that being said, cheers. Let's dive right into the video. So like I said, man, ChargePoint today was not, it was not the day for ChargePoint. This stock, to give you some perspective, yesterday it was over $7 per share. And just a couple of weeks ago, look at this. This stock was almost at $8.50 per share. So this thing has been destroyed, and it's not just been over the past couple of weeks. I mean, ChargePoint all year, if I'm not mistaken, has been destroyed. Yeah, look, this thing was at $14 pretty much early on in the year. That was in the beginning of February. And again, we just got under $5 per share this morning after the company just reported numbers. Not this morning, but I believe it was yesterday. Yeah, we closed at $7 yesterday. And mind you, when the earnings came out yesterday, after the bell that is, this stock went from $7 down to about $6.20. So it dumped, 12% initially. And then we had that massive dump at open. We clearly took the lows out from yesterday after the bell, which, I mean, it can't get any worse for the bulls, guys. That is not a good sign. So let's see here, guys, before we dive into the PDF and actually break down the earnings more in depth, let me see the headline numbers here on the live news tab. Give me a second. So it looks like they did Q2 EPS of negative 24 cents, which missed the negative 15 cents expected. All right, that's not good. And it looks like here they missed on, they missed on sales, $150.49 million versus $153.24 million expected. So double miss for ChargePoint, guys. That's never a good sign. Whenever a company double misses, that's not good. Not seeing anything here actually, no, I am seeing guidance here, and the guidance is rough. Oof, guys, not good. Full year 24 revenue, they see $605 to $630 million versus the $674 million expected. Not good. A lot under that guidance. And it looks like here they expect Q3 revenue of $150 to $165 million versus the $181.63 million expected. So Q3 revenue, well under the estimates. That's bad. Full year revenue, well under the estimates. That's, even worse. And again, they missed on EPS and on revenue for the prior quarter, which is like the cherry on frickin' top, guys. This does not get worse numbers-wise for CHPT, but look at this. A lot of these firms still have an outperform weighting on ChargePoint, especially, let's see, TD Cowen, they have an outperform rating, but they did lower their price target to $11. All right. Looks like Wolf Research adjusted their price target to $8, from $12, but they still maintain an outperform rating. So I guess they're still technically bullish, maybe just not as bullish. Let's see here. RF Lafferty maintains buy on ChargePoint, lowers price target to $17. Citigroup maintains neutral, lowers price target to $8.25. So, I mean, look, I'm not going to just blindly go and buy based on analysts or firms or banks, institutions, whatever you want to call them. But it is interesting to see that this thing's gone down a ton. And a lot of these firms are still bullish. And honestly, guys, this is the time to buy. Not stock, this stock in particular, but stocks in general, when they're out of favor, when they're beaten down and thrown in the dumps, that's the opportunity to look deeper into it. Again, not for this stock. I'm not telling you to go buy this stock, ChargePoint, but stocks in general. That is where the opportunity is in a bear market, right? When stocks are down, which in this case, ChargePoint is heavily in a bear market. This stock was at $30 not too long ago, guys. In fact, it was at $50 in the end of 2020 to give you some perspective. So this is down massively, and it was for sure in a bubble. I mean, we all knew it at the time, and now it's completely popped. And again, that is where the opportunity could be for companies in general, right? So let's dive into these numbers a little bit more in depth. Alrighty, folks. So here we are in their investor relations. And by the way, you can type this in on Google, find it yourself. It's not freaking rocket science, right, guys? Just type in the company, type in investor relations, and boom, you can see this for yourselves. But lucky for you, you don't have to, because we're going to talk about it right now and go over the highlights very quickly from the report that just came out about 24 hours ago. So ChargePoint reports fiscal second quarter, fiscal year, yada, 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 2024 financial results. And let's see some of the highlights here, guys. Second quarter fiscal revenue of $150 million. That's representing 39% revenue growth. So even though that missed the estimate, right, like we talked about a second ago, that is still up around 40% year over year. Actually pretty impressive there, guys. And GAAP gross margin of a whopping 1% and non-GAAP gross margin of 3%, reflecting 19 percentage point margin impact from inventory impairment charge. All right. Looks like in the quarter there was a reduction of estimated $30 million in annualized operating expenses. All right. And in the third quarter fiscal 2024, revenue guidance of $150 million, $165 million, and annual revenue guidance, yada, yada. But we already talked about that. That's under the estimates, right? Not good. And you guys can see here, the president and CEO of ChargePoint said, quote, in the second quarter, ChargePoint delivered solid growth, and their revenue of $150 million represented a 39% year-over-year increase, yada, 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 despite a hesitant economy. In the quarter, they fortified their access to working capital with a $150 million revolving credit facility and $38 million raised via our at-the-market offering. So, of course, they keep on issuing shares, which we're not going to get into in this video. And it looks like here they took an inventory impairment charge to address a significant supply chain related issue, and they announced an estimated $30 million in annualized operating expense savings from reorganizing the business the business for agility, efficiency, and scale, which is good. And they remain committed to delivering their goal of generating positive non-GAAP adjusted EBITDA by the end of calendar 2024. Pretty good, guys, if you ask me. Let's come down here a little bit more and see their updated balance sheet. Where the heck's the balance sheet? Here's the, what is this here? The preliminary condensed consolidated statement of operations. So, yep, let's keep coming down a little bit. All right, here we go. This is the balance sheet right here, guys. Let's quickly look at it. Looks like current liabilities are sitting at about, what, $340 million. You guys know me. I like looking straight at the current ratio. So current liabilities, $340 million. Current assets, let's see. Please don't give me a heart attack. $690 million. All right, not bad. $690 million current assets, which is comprised of, let's see, of course, cash equivalents, right? Restricted cash, accounts receivable, inventories, prepaid expenses, and other assets, current assets. So roughly $700 million of current assets over that, what, $340 million current liability. So their current ratio is very healthy too. It's roughly a 2, meaning they could easily pay their current debts due in the next 12 months with cash on hand, or maybe not with cash on hand, but with assets that they could easily liquidate, right? Short-term investments, cash and cash equivalents. You guys get the point, right? Maybe not so much inventories, but you guys get the point. So that's pretty good there, if you ask me. And let me come back up here to the revenue. So revenue came up a lot year over year, man. Last year they did. Looks like for the 3 months ended July, they did $84 million. They just did $114 million, or that's actually, no, that's one segment rather. That was the networked charging system segment. But overall, $108 million last year, up to $150 million this year. So maybe they didn't grow as much as expected, but they still grew pretty decently, and you got to give them credit for that, guys. But of course, the reason why the stock's down is because of that guidance, the miss on revenue, EPS, and overall, they're just just diluting the crap out of shareholders. That's the reality of the matter. And as for me, guys, am I buying the stock? No, not quite yet, but it's on my watch list. I'm not telling you guys what to do, of course, but I'm not buying it. I'm just keeping my eye on it, and we'll see how it plays out. So with that being said, if you guys found value, hit that like button, make sure to subscribe, and do not forget to follow me on Twitter or on X at Stas Talk Stocks, or just type in Stasser Fest. You'll find me on there. And you might as well get up to 16 stocks from Moomoo. Why not? Each of those could be valued up to $2,000, guys. Use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat. Fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And guys, the best part of the promo is fund your account with at least $5,000. On top of those 15 stocks, you also get a free share of Google stock or Tesla stock, which makes this promo a no-brainer. So get on it, guys. Use that link down below. And with that being said, cheers. I'll catch you all later.